Hey everyone, welcome to tonight's live. Today is Sunday, September 15th. It is 8 p.m. Eastern Standard Time. That is New York session time. We're going to go over a few market news first throughout the week. We're going to go on Forex Factory. That's my calendar of choice. And we're going to go over each day to see which one has the red folder news. Now, for my beginners, like I always mention, if you see red folder news, try to trade around it. Don't try to trade with it. More likely than not, you'll probably get, stopped out or wrecked. Sometimes your stop loss doesn't get hit. Price action just breaks right through it and you liquidate your account. Be very careful with red folder news. Usually the rule of thumb that I like to go for is like an hour after red folder news. That should be good enough for all the dust to settle, all the volatility to settle, and then for you to start looking for a good proper entry into getting into your trade, right? Whether it be bullish, whether it be bearish, who knows? Just make sure to give it some time after the volatility has settled and then start your trading day. Now, without further ado, let's get into the Forex Factory calendar. So today, Sunday, September 15, we have no red folder news. Also keep in mind, we have a bank holiday for JPY. So we shouldn't see much movement, right? For Asian session. I'm not going to say zero movement. You still have New York traders. You still have your London traders. They might be just trading the Asian session. Whatever strategy you may have, they might be using it for the Asian session. So you'll probably see some movement anyways. Not as much as usual though. It's a bank holiday. Monday, tomorrow, we have no red folder news. Tuesday, we do have red folder news, right? So we have Canadian dollar and we have the USD. Both of these pairs, because I'm not going to say both of these news, right? It's both of these pairs because there's multiple different red folder news for each one of those, are at 8:30 a.m., which is 1 hour before the New York market open. So keep an eye on that. That's going to be CPI for CAD and then core retail sales for the USD. Wednesday, we have red folder news during the London session. That's going to be GBP. Then in the New York session afternoon, we have FOMC, 2 p.m. This week's going to be really wonky. That's what I've noticed with FOMC when it's happening throughout the week. Everything else gets pretty wonky. Price action, I wouldn't say goes against what you should be expecting, but I'll say it doesn't go the way you want it to most of the time during FOMC. So be very careful with the days leading up to FOMC and the days after, right? Thursday, red folder news. We have it on GBP during the New York session, right before New York session opens. So 2 hours, 30 minutes, right at the end of the London session. 1 hour before the New York session open, we have USD red folder. That's unemployment. JPY tentative, like usual during the Asian session, or who knows, it's tentative. Friday, we still have JPY tentative for Friday. Then we have an hour, 15 minutes before New York session open, we have CAD, Canadian. And then we also have an hour before New York session open, CAD. Cool. So let's jump on the charts. We're going to be starting with our indices first. Weekly looks like it still wants to be bullish, right? So we maintained this weekly fair value gap over here, tapped into it, came back down, retested it. Very, very close. Not exactly on the fair value gap, right? It didn't have enough volume, enough momentum to actually come right back down to the weekly, tap into it, and then come right back up. So it got rejected right over here at this line, which is 18,000. So it's 18,363.50. And then it bounced up all the way over here. So the weekly closed pretty high at 19,520-ish, right? Daily is forming a pretty bullish candle here as well. So we have here, as you can see, fair value gap after it started pumping from this point over here. So this is going to be a nice little point of entry for us. So we'll probably have red folder news wick into it and then bounce right back up. So I'm going to clean up these charts a little bit. These points I was looking in for entries. So I'm going to remove them. And then this over here was an overlap between this bearish candle and this bullish candle over here. So I had this marked over here at 19245.50. And then I actually got into a long position once price action tested out there, came right back above it, and then I went long. So I got a pretty decent position out of that. So I'm looking for bullish positions here. So set your alerts 19029.75. You gotta see how price action reacts to there. So since we are still very bullish, you can even put a limit order buy there and the continuation to the uptrend. Put the stop loss at the bottom of the previous candle, which is the body over here. That looks like it's about 18721.50. But we'll probably see better entries on the 4-hour once we get into a lower time frame. What else do we see up here? Not much. This has been tapped into and mitigated. This is a lower time frame. Should have been my 4-hour. I'll keep that active because I want to keep looking at that. So if price action breaks through it, sits above it, then we're going to be extremely bullish. We still have this over here. It's a bearish fair value gap. That's at 2320. Once price action comes back into here, I'm expecting it for it to tap into here and then dump right after. But we'll see how the market plays out. Let's go to a lower time frame. Lower time frame, you can see over here at 19796.75. Price action tapped into it, respected it, did not break through it, and then continuation to the downtrend. Over here, we have a fair value gap, bearish fair value gap. And then over here, we have a bullish fair value gap overlap right here at 19333. Set an alert over here, actually, because we should have price action. It should test out these two levels here and then continue up. So 19329.50, and then also this overlap over here, 19232. Those two should give us some kind of indication, right, of where price action is going to go. It might even ping pong between the two until it gives us a clear direction with a market structure shift. And then that's when we should be looking into getting into those positions. Now let's draw the fibs from the bottom of this wick, because this is the structure here to where we are currently. And then we'll see we have an overlap over here. This fair value gap has this golden pocket, which is 0.62. So we should have some price action play out over here. You can also see over here, there is a order block right overlapping with this fair value gap over here. So if I remove this fib tool, it's going to be right here. So that order block is right there. Fair value gap's right there. My entry will be right there exactly, actually. I'm going to color that green just so I can see a little bit easier. But then that's where my entry would be if I'm getting into this fair value gap. 18930.75. I have noticed that's a lot of times when you have an order block right before the fair value gap, it hits that border, right? So that overlap where you have the order block and also the fair value gap, it just taps into it and then continuation to the upside. It's happened to me a lot of times. This is something that I've noticed with my trading. So just keep that in mind. It might not happen every single time, but you'll see like it happens quite often. So that's pretty much what I see here. This has been tapped into and mitigated. So it should break through it. Nothing really holding that back. And then you have that fair value gap that was converted into an inverted fair value gap. So your next level is going to be 19888. Right? So keep an eye on those. Set an alert for that as well. Remember, when you're setting these alerts, I'm not doing it here live with you guys. I'm just calling them out as I see them. But when you set your alerts, make sure to put a note with them, right? So if you're looking for a bearish entry, make sure to put that into your notes, right? So you're going to double click, and then in the message over here, you're going to put, hey, start looking for shorts, right? And then I know once that alert goes off, it sends me an alert to my phone, my watch, everything, all my devices, and then it's going to send me my note, which is start looking for shorts, right? Let's move on to gold. What do we see with gold? Gold is extremely bullish. Gold made a new all-time high. We're going to move this up. I'm going to go into the lower time frames because I want to make sure I capture that all-time high correctly. Yep, that looks about right. All right, cool. So I was expecting this to tap into this area here, which it did multiple times. Retested this area. It was a consolidation, and I wanted it to come down. I was expecting it to come down, but gold is extremely bullish. Broke out of this range, so I'm going to remove that. Now we have a fair value gap over here. This is the bottom of the structure. If I draw my fibs from the bottom of the structure, which is right here, to where we're currently at, this fair value gap is sitting right above the 50% mark, which is the equilibrium. So I'm not expecting this to tap into here because it's at a premium zone, right? So you don't want to short, you don't want to long premiums, and you do not want to short on the discount. You want to do the opposite. When it's overbought, right, premium, you want to short it. And then the opposite, when it is not being bought, you don't want to short it. So that's going to be in a discount, right? So right now it is at an extreme premium. I can't long here. I need to wait when it comes back into a discount zone in order for me to go long at that position. It's kind of like buying like Black Friday. You're buying a TV. You're not going to buy it at the peak amounts. You're waiting for the right moment for it to come down. And then that's when you buy the TV. Same thing with this price action. You're waiting for the price action to come back down to a nice respectable level, discount zone, and then buy it, go long, and then vice versa. If it's an extremely high zone, you're looking for an entry in order to short it and then get it at an extreme discount. So we're going to close out this fib here. Daily, fair value gap sitting above the equilibrium in the premium zone. Not a very high quality entry. Let's see what the 4-hour tells us. 4-hour has the same overlap over here. If we look at this is the structure. Go up to where we are right now. So here on the 4-hour, you do see that there's an entry. It is sitting right below the equilibrium, that's 0.5. And then these are the key levels that I want to enter at. And remember what I said about the overlap with the order block and the fair value gap? Well, we have one over here. Over here at 2550, that's the overlap there. So now you have 3 different confluences. You have fair value gap sitting at a discount zone. You have my optimal trade entries, my OTE. 2 of them are sitting inside this fair value gap. We are going with the trend, which is bullish until we're not. And then also we have this order block here confirming a nice little confluence for us as a proper entry. So what are we going to do? We're going to set an alert right here at 2550. And honestly, I could probably put an entry here. I do futures. So I'm a futures broker. I should be able to actually trade this. Cool. So that's 10 contracts right there. Let's move on to silver. I'm going to put a little green here. I'm in that trade. Silver, what do we see? Silver, we broke through this fair value gap over here, which I think, yeah, it's a nice little overlap over here on the 4-hour. So we broke through that. We're on the daily. broke out of this trend line. Now we're going to retest over here on this market structure. This one's super important because this is the candle that broke out of the trend. And then we also have this fair value gap over here. Set an alert over here, 2971. If we draw our optimal trade entry, which is this market structure here, to where we're at right there, you will see that that's exactly where the equilibrium is, at 0.5. It looks like a really nice zone. A lot of price action has tested out this zone over here, which is 29.695, right? So 29.7, round it up. That's the area we're looking for entries. Let's go down to the 4 hour to see if we see anything cleaner. Yeah, so look, on the 4 hour, if you look left, you're going to see this fair value gap over here. And then that overlaps over here as well. So I would like to use this as my entry because now we're sitting below the equilibrium. And it looks like, yeah, we're sitting below the equilibrium. We have two different fair value gaps that overlap. And you just inverted this fair value gap as well. So now instead of this being a resistance fair value gap, now it's going to be a support fair value gap. Now remember, they're not support and resistance levels, but I always use them as a kind of like a support and resistance level just to give me a little bit more confidence into that trade. So I use that as orders that haven't been fulfilled, but going with the trend. So this one right over here, for me, I would say this is a way better play. So 29.47, that's what we're looking at. Let me take out these fibs. Going into Euro. Figures, right? My Euro position got stopped out. And then went all the way down here. Crazy. So Euro, looking on the daily. What do we see on the daily? We're seeing that it's losing momentum. It's giving me lower highs and lower lows. But right here, as you can see, we bounced off our fair value gaps. Tapped into it, mitigated it, and then continuation to the upside. So for now, we are bullish. We draw our fibs here for the market structure to where the price action is currently at. And then we get optimal trade entries here and here. My 0.62 overlaps with this fair value gap here, which is at 1.10850. And then I have another fair value gap overlap here, which is actually multiple time frames overlapping, and also my 0.8. So that's exactly at 1.10665. So keep an eye out for those two. I would say my highest quality play is going to be this one, 1.10665. Yeah, that's what we're going to be looking for. That's on the 4 hour. I feel super confident with that. But at the same time, we have this fair value gap that we just inverted, and now price action keeps sitting above it. So keep an eye on it. I'm expecting price action to actually pull back into these key levels here, my optimal trade entries, collect some liquidity. You also have at the 0.8 mark, right? Like I said before, the order blocks and the fair value gaps. You have an order block right here. Order block and the fair value gap overlap right exactly at that 0.8 level. So that looks like a really nice play. Looks something like this, right? And then continuation to the market structure. Moving on to GBP. GBP is looking bullish. Tapped into this market structure over here. Excuse me, this fair value gap over here. And then continuation to the upside. We have a gap over here as well. Opening day. Opening week. The first day gap. Let's go down into the 4 hour. What do we see in the 4 hour? Well, the structures are looking a little bit weak. We're getting lower highs, lower lows. This might be the change in confluence that we need. We have this fair value gap over here, overlapping with this bearish one. And then that bearish one gets disrespected by this bullish one. So now we have 3 different fair value gaps and also a lot of price action being tested out in the same area here. Draw our fibs from the market structure to where we're currently at. And then you see like this fair value gap here, that's the equilibrium. I don't feel comfortable entering it in there. I do feel comfortable over here. You have this order block just a hair below the previous candle of this fair value gap. So I'll probably be looking at that for my entry. So put an alert. This entry is 1.3062. If it breaks through that, then we're looking for short positions. But for now, we're going with the trend. We're looking bullish, even though it's losing momentum. It looks like right here, it's fighting to get the momentum back. And then this level over here too, this fair value gap, it's a very important key level because it's massive. We're going to color that red. We're going to set an alert. That's a bearish fair value gap of the 4-hour. Pretty important zone as well. 1.3174. We're expecting price action to tap into it, sweep it, and then dump after that. Now, if price action breaks through it, market structure shift, pulls back into here, and then continues up, then we are extremely bullish. Going into the JPY, let's get rid of this OTE. What do we see? JPY is making its comeback. Making higher highs, higher lows on the daily. Looks beautiful. Let's see if we can find a point of entry for our 4-hour. Fair value gap over here. Let's draw our fibs, market structure low, to where the price action currently is. And this fair value gap is actually sitting above the equilibrium. So I don't feel comfortable longing that at all. But as you can see, JPY is a little bit different. This is the market structure to where it's out here, the high. Nope, it's still respecting the optimal trade entries, right? So I thought it was going to be above the equilibrium here as well, but no, it's not. So this was actually at the 0.62, between the 0.62 and the 0.705. You could have used either of those as your entry. I rarely use the 0.8, but in this case, it went perfectly to the 0.8 and then continuation to the upside. Now, reason it could have went all the way to 0.8 is there's an order block right here. But it didn't tap into the order block, or did it? Let's see. I always use the bodies of the order blocks. So it looks like, yeah, it actually did respect the order block. Like to the pip. That is insane. Yeah, went exactly to the order block. Right there, boom, to the actual pip of the order block. And then that also overlaps with the 0.8. So the 0.8 is just a little bit above it. And then it went all the way to the order block, tapped it, and then continued upwards. So for now, there's no proper entry for us. We're going to keep an eye on this level here as our fair value gap. It's not a high probability, but it is a fair value gap with a continuation to the upside, and it's a continuation of our bias, which is bullish. So take it with a grain of salt. It's not a high probable fair value gap for me, but it's a possibility, right? So just keep an eye on that. And that's pretty it, guys. That's pretty much it. And that's pretty much it, guys. So keep an eye on the charts. Be very safe this week. Avoid red folder news if you're a newbie. If you're a professional, you know how to trade news, all the better to you. But be very careful with the red folder news. Be careful of the market this week. It is FOMC, so price action is going to be a little bit wonky or very wonky. So careful with that.